Good morning, everyone, and thank you for choosing Market Briefing analysis of today's financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Financial news, June 14, 2023. Stocks edge higher in countdown to Fed decision. Investors are eagerly awaiting the Federal Reserve's decision on interest rates, as markets are positioned for a potential pause in the U.S. Central Bank's rate hiking campaign. In pre-market trading, Advanced Micro Devices Incorporated, a prominent chipmaker, saw a rise after unveiling its planned line of artificial intelligence processors. Tesla Incorporated is also making headlines as it looks to extend its record-breaking winning streak to 14 consecutive sessions, adding a remarkable $240 billion to its market value during this period. Shell plc shares received a boost after the oil major announced an increase in its dividend, while Vodafone Group plc gained following an agreement with CK Hutchison Holdings Limited to combine their UK mobile businesses. The S&P 500 experienced its fourth consecutive increase, nearing the 4,400 mark, a level it hasn't traded at for over a year. Meanwhile, in Europe, a rally in miners propelled the Stoxx 600 benchmark to its highest level in 3 weeks. Tuesday's data showing a slowdown in U.S. inflation has been embraced by global investors as confirmation that the Federal Open Market Committee, FOMC, will maintain rates in the 5.25% range. Swap traders have put the odds of an interest rate increase at only 10%, although there is still a possibility of a hike in July, given that inflation remains more than twice the central bank's target. According to strategists at Mizuho International, a hawkish skip is the most likely scenario for today's FOMC. We expect Powell will follow up with a relatively hawkish tone in the press conference, stressing that inflation is still too high and the Fed will be resolute in returning inflation to target. Treasury yields steadied after a surge in short-term yields on Tuesday, while the dollar remained relatively weak, holding near a one-month low. Stephanie Niven, a portfolio manager at 91 UK, states, "We're very much expecting a skip. The Fed is very data-focused. We see them having factored in some of the interesting inflation data we saw yesterday. And we continue to see them doubling down on their policy." James Searle and Saumesh Dutta, Citigroup strategists, comment, "If the Fed does skip a hike in June, some hawkish surprise at some point would be expected as underlying inflation remains stably too strong." Jim Reed, a Deutsche Bank macro strategist, explains, "Our U.S. economists think that the Fed statement will see a hawkish adjustment. They also think the dot plot will show a further hike penciled in for this year." Mark Hafley, CIO of UBS Global Wealth Management, notes, "While our base case is for the Fed to skip a rate hike at today's monetary policy meeting, we don't interpret the data for May as being sufficient to allow the Fed to call a final end to tightening." Wall Street's volatility index, known as the CBOE Volatility Index, has dropped below 15, underscoring the support for risk assets. Notably, the S&P 500 has gone almost 80 trading days without a drop of 2% or more. As we await the Federal Reserve's decision on interest rates, key events to watch this week include Eurozone industrial production, US PPI, the IEA oil market report, and the Bank of Japan rate decision. That wraps up today's top international financial and market news. Stay tuned as we bring you the latest updates and analysis on the Federal Reserve's decision and its impact on the global markets. I'm Naeem, your expert international finance journalist. Thank you for watching. Before we continue with our analysis, we'd like to remind you of your support for our channel Market Briefing analysis of today's financial news. If you're enjoying this video and find our content useful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and bring you even more quality content. Now, let's get back to the financial market news and the latest updates. Fed expected to pause rate hikes as U.S. inflation slows, market news. In today's top financial news, Advanced Micro Devices, AMD, is set to introduce its new AI chip, the MI300X, later this year, posing a significant challenge to NVIDIA's dominance in the AI chip market. However, analysts note that NVIDIA currently controls over 80% of the market share. Meanwhile, the cost of borrowing in the UK, as measured by the yield on 2-year government bonds, reached 4.8%, surpassing levels seen during Liz Truss mini-budget. This increase was driven by news of record-breaking annual wage growth in the country. Wall Street analysts are warning that China's property sector may remain in a slump for years, potentially dragging down the country's economy. Even if the Chinese government attempts to stimulate the sector, the problems are complex, and a quick recovery is unlikely, according to Goldman Sachs. On the global stage, Saudi Arabia sees China as a crucial partner in today's multipolar world, where power is distributed among many centers instead of being dominated by the U.S., as stated by Saudi Minister of Investment Khalid Al-Falih. Returning to the U.S., traders anticipate that the Federal Reserve will pause its rate hikes following the release of May's Consumer Price Index. While inflation remains at 4%, double the Fed's target, it represents the slowest increase since March 2021. Traders are less concerned about core inflation, as the rise in shelter prices, a contributing factor, is not reflective of the current rental market. RealPage data shows a modest 2.3% increase in rents year-over-year in May, suggesting potential cooling in future CPI readings. Given the easing inflation, there is room for the Fed to pause its rate hikes. Traders estimate a mere 10% chance of a rate increase, according to CME Group's FedWatch tool. However, experts speculate that the pause may be temporary, with the Fed resuming its rate hikes in July. The Fed's decision on future rate increases will depend on upcoming inflation data, including the Producer Price Index. As traders await the Fed's decision, today's market news reflects the dynamic landscape of technology, international finance, and central bank policies, influencing global markets and investor sentiment. Stocks. S&P 500 futures rose 0.2% as of 6:36 a.m. New York time. Nasdaq 100 futures rose 0.2%. Futures on the Dow Jones Industrial Average fell 0.1%. The Stoxx Europe 600 rose 0.6%. The MSCI World Index rose 0.2%. Currencies. The Bloomberg Dollar Spot Index fell 0.1%. The Euro rose 0.1% to $1.0804. The British Pound rose 0.3% to $1.2647. The Japanese Yen rose 0.2% to 140.00 per dollar. Cryptocurrencies. Bitcoin rose 0.4% to $25,960.72. Ether rose 0.4% to $1,745.65. Bonds. The yield on 10-year treasuries was little changed at 3.82%. Germany's 10-year yield advanced 4 basis points to 2.46%. Britain's 10-year yield was little changed at 4.43%. Commodities. West Texas Intermediate crude rose 1.4% to $70.37 a barrel. Gold futures rose 0.2% to $1,963 an ounce. In conclusion, we'd like to thank you for watching Market Briefing analysis of today's financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more fascinating news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.